Your top stories right now, 8 a.m. on the East Coast. The stimulus showdown continues. The Senate approved the Biden administration's $1.9 trillion relief bill in a late-night session Saturday night. It is now headed back to the House as investors watch for effects on the bond market and the risk of inflation. We are expecting it to reach President Biden's desk by Tuesday. Iowa Senator Chuck Grassley is here later this hour with his take on that. Plus, what is going on with election integrity, H.R. 1. on the docket. Then markets this morning are lower. Take a look at futures indicating a decline for the Dow Industrials led by technology and the NASDAQ. Right now, the NASDAQ is down 183 points. This is the low of the morning with a decline of 1.5%. The Dow Industrials also negative by 40 points and the S&P 500 weaker by 24. We had this trend in place for the last couple of weeks. Last week, for example, the market was mixed. A strong jobs report helped keep the Dow in positive territory, but the NASDAQ was down 2% on the week. This is the third week in a row of declines for the NASDAQ. One reason, rising interest rates. The 10-year Treasury topping 1.6% this morning. It is now at 1.603. Earlier in the overnight session, it hit 1.61%. It is up 3.7 basis points. Also inflationary, crude oil hitting its highest level since October of 2018. After the world's largest crude terminal in Saudi Arabia was attacked, the price of oil now at $65.97 a barrel. European markets this morning are higher, although fractional moves here. Take a look. The FT 100 just went negative. It's down 5, but the CAC 40 in Paris is up 44, and the DAX index in Germany is up 180. That's 1.25%. In Asia overnight, it was red across the board. As you will see, worst performer was the Shanghai Composite, down 2.33%. Mornings with Maria is live right now. Now, some of the top stories that we are watching this morning. President Biden's $1.9 trillion COVID relief package heads to the House this morning. The measure passing the Senate in a straight party line vote Saturday night. No Republicans voted for this. After even with changes made to appeal to the centrist Democrats, a final vote is expected tomorrow. Meanwhile, a big deal potentially for GE. It could be closing in on a $30 billion acquisition. The company reportedly close to combining its airline leasing service with Ireland's AerCap, according to the Wall Street Journal. It's the latest move from General Electric to restructure, and the leasing business is the largest remaining piece of GE capital as GE continues to shed assets. The stock this morning is up 2.5% at $13.94. In New York, Governor Andrew Cuomo is refusing to resign as 2 more women accuse him of sexual misconduct. New York Senate Majority Leader has now joined a list of nearly 50 New York lawmakers calling for Cuomo to step down. The governor, who's also under federal investigation for undercounting and underreporting the number of COVID-19 deaths in nursing homes, remains defiant. He says the calls for his resignation are politically motivated. And a global recovery starting here at home. Oxford Economics predicting the world's economy will grow 6% this year as vaccine rollouts and state reopenings help push economic recovery. That is the fastest rate in half a century. It will be the first time since 2005 that the U.S. will make a bigger contribution to global growth than China. Futures are under pressure to start the trading week. Technology, of course, leading the decline. As you can see, the NASDAQ is down 187. Investors are also watching interest rates move higher. The yield on the 10-year Treasury now at 1.60%, as you can see. Joining me right now is IHT Wealth Management President Steve Dudash, and with us all morning long this morning, Patrice Lee Onwuka and Brian Brenberg. Great to see everybody. Thank you so much for being here, Steve. What's your take on this sell-off underway for NASDAQ?
Well, it's because of interest rates. Interest rates are moving up a little bit, but I'm not as worried about the interest rate moves as some people are. I'm not hung up on inflation right now. As long as European markets are at 0 rates, if not negative, we can't go up too much more. So this is good. This is healthy. Let's move it up a little bit. Let's blow out some of those momentum trades that were just getting out of control. Anything that's got a future PE in the thousands, you shouldn't be a part of. So the NASDAQ to pull back another 5-10%, I think is actually a good thing. If it goes down another 10%, we're going to be looking to rotate back in. But the bigger concern, and you had just mentioned it, is oil. You know, $65, $70 barrel. I know part of that is because of what happened with Saudi Arabia over the weekend, and that's just short term. But in the long term, in the last 12 months, oil has just been going up and up and up and up. And if it hits that $80 mark, which isn't that unrealistic at this point, I'm worried. That is a real tax on our economy. That is something that can really weigh on that growth. I know you guys are saying that 6% number. If oil's at $80 or at $80 a barrel, that's hard to hit that number. So there's only a couple ways to play this. One, buy energy, buy into the energy sector. I know that's not a popular place to be lately, but you get into that right now, and that at least offsets the risk in your portfolio. And then two, you got to watch out for those tech stocks right now. Any momentum thing, anything that made 100% last year has got a big red warning light in my eyes. And we've been really trying to rotate away from those for the last few months now.
Well, look, let me just point out that Nancy Lazar from Cornerstone Macro has increased her expectation for economic growth for 2021. She's taken it up from 7 to 9%. So she is still expecting a very strong growth performance, partly because of the stimulus package, $1.9 trillion hitting this economy. Brian Brenberg, jump in here because we are talking about growth once again for the economy in 2021.
Yeah, we are. And there are a lot of good questions about how much will grow, how fast will grow. But the problem I see in terms of valuations is you're trying to figure out the growth story on one hand. But to me, almost everything that's happening right now is actually a trade on what the government's going to do. I mean, we're looking out into 2021 and we're talking about $3 trillion more in spending. How in the world are you supposed to bake that into your valuation, Steve? I mean, to me, this isn't even about recovery anymore. It's about trying to pick out what's happening in D.C. and predict what's going to, all this spending, all the inflation. So to me, this is really difficult because it's not about the economy. It's about the government at this point.
It hasn't been about real valuations for a while now. You're 100% right. The government just keeps flooding the market. It's just an artificial floor. That's why those tech stocks did so much last year. That's why, the market shouldn't have grown 20% in a year where our economy pulls back. It's just the truth. You know what I mean? I'm happy for everyone's portfolios, but that's not how it's supposed to work from real math. And it's because the government's flooding in. I have no idea, and I've said this a few times, I have no idea why we're throwing $1.9 trillion more into the economy. It does not make any sense. It's a political thing. We all know it's a political thing right now. Let our economy go. Let it just grow. It looks like it's healing nice. It looks like this summer could be a huge growth thing like you guys are talking about. It could be one of the best growth summers ever if the economy really opens back up. Why flood another $1.9 trillion into that? Makes no sense. And sooner or later, unfortunately, everyone who's watching this, we're all going to be the ones having to pay that bill at some point, and it's not a good thing. But politics, whatever, we'll get out of that. The one nice thing about 1.9 is it puts a floor in the market. You can't have the market pull back 20% when there's just cash everywhere going on top of cash, on top of cash. Half the cash from the last stimulus was never spent. I don't get it. I don't. But
that's right.
From a market standpoint.
That's right, Steve. There is $1 trillion left from the prior stimulus package that has yet to be allocated. Let me ask you about allocating your own capital in this environment. What's your take on the future of pandemic and the stay-at-home stocks? These are the names that have been leading this market over the last year. Do you think these stocks maintain their momentum as the world moves closer to getting back to normal?
No, I don't. And I've said this before, too. And we were just talking about this a little bit. A lot of those are the tech side stocks. And frankly, they got ahead of themselves. There's no way Zoom should have gone up as much as it is Tesla. I mean, I'm not saying I'm against companies like Tesla, but you can't trade 1,000 times forward PEs. It's just not real math. You can't be betting on what they're going to be doing in 2050. So a lot of it is, it got a little out of control. That's why this tech pullback right now that you're seeing in NASDAQ, it's not a bad thing. It's actually healthy for this to happen. I'd like to see the NASDAQ come down another 5 or 10%, and then I'll get back into those, Zoom type trades again. But right now, we've rotated out. We've gone into more cyclicals. We've gone into more value things. We've bumped into the energy sector. We've even looked at international. Now, every year for like the last decade, I'm like, European markets are finally going to pick up. European markets are finally going to pick up, and then they don't. So when I say international, we're looking more Asia than Europe right now. Europe, they can't pull it together the right way. It's unfortunate, but it's just the truth. And that's why you see zero interest rates in Germany, and that's why our interest rates can't spike. So we are the benefactors of Europe having some problems right now, or for the last decade.
Well, you're right. I mean, there's a real debate on whether or not Europe goes into a double dip recession, and that has to do with the fundamentals of the way the economy and the labor market is set up there. Steve, we'll keep watching that. Great to see you this morning. Thanks so much.
Thanks for having me, guys.
Steve Dudash joining us. Much more ahead this morning. Coming up, calling for his resignation. The next steps for New York's embattled Governor Andrew Cuomo as his political future is increasingly coming in question. Plus, changing the way America votes. Iowa Senator Chuck Grassley